Market is struggling to find reasons to fall. Even post the Fed commentary, we saw within a day or two, things have gotten back to normalcy again. Where there was 1 or 2 days of scare and volatility. But yeah, some of the mid caps, some of the small caps, the valuations are leaving absolutely no room for any sort of error. And therefore, it is very important that while trying to look for ideas, one does a thorough job on bottoms up and cash flows, because it's very easy to get carried away in such kind of an environment. We are ending FY21 with 540, which is what our estimates were at the time of pre-call. Maybe 5 or 6 rupees slightly higher. So when we did the preview, it was I think 533 or 535 rupees. We're ending it at 540, which is a growth of 14%. And as I keep repeating, it is the highest growth in a decade for Nifty earnings, corporate earnings. Cumulatively, top down, when you look at Nifty FY22 EPS estimates, we have seen a marginal 1.5% upward revision for FY22 numbers to somewhere close to 745, 750 rupees. Right? This number was a percent lower when we did the previews.
The other headline came from the currency market. The rupee hit fresh 7-week lows against the dollar as oil importers rushed in to buy dollars given the rise in crude oil prices. The dollar's global strength also weighed on the rupee. We spoke to NC Badrinivas, the head of markets at Citi South Asia. He expects the dollar index to strengthen even further towards the 93 mark, while he expects the rupee to move lower towards the 75 per dollar mark. Listen in.
Continue to feel that dollar in general will have will be stronger in the coming months. Our reserves are very strong. The RBI has more than sufficient ability to intervene, and we don't expect INR to be under any undue pressure from a depreciation point of view. But having said which, given how RBI has been intervening, our near-term expectation is for rupee to probably move towards the 75 levels.
Well, let's get straight to the second headline. Now, auto major Maruti zoomed closer on 5% and was one of the top gainers on the Nifty today after Bernstein bets big on the stock with an outperform call. Nimesh joins us to detail the rationale behind that report. Nimesh?
There is an interesting report coming in from Bernstein on Maruti Suzuki. They believe that the company is on the verge of a new product cycle. And, while other companies are just looking to refresh their old models, Maruti has got a very healthy pipeline of new products, and they're going to reposition themselves in a big way. So Bernstein believes that this is once in a decade kind of a transition which is going to happen as far as Maruti is concerned, and hence they have an outperform rating with a target price of 79.50. Bernstein believes that company is going to focus on 3 key strategies. The first is to launch a lot of SUVs to fill the range which they've been missing so far. So the SUV portfolio will be very, very strong going forward. That's the first thing. Second, Bernstein expects the company to focus on hybrid models as well to fill in some of their vehicle ranges. And 3, they expect some reintroduction of some diesel vehicles as well in some of their products. So that's the key reason why Bernstein believes that Maruti is a stock to watch on, purely from a new product cycle point of view, and the fact that this is going to be once in a decade kind of transition for the company, and hence they have an outperform rating with a target price of 79.50.
Okay, so it will transit to making SUVs. That's the view. While brokerages remain upbeat on the Maruti stock, Shashank Srivastava of Maruti remained cautious when we spoke to him. He told CNBC TV18 the company is far away from the peak of Q4 FY21 in terms of sales and demand. Listen.
From the data which we have, that there has been a sharp increase in bookings and in inquiry level once the showroom starts opening. So after the 8th, we have seen some increase in the bookings as well as in the inquiries. And as more and more outlets are opening, we are seeing that traction coming in. But we are still far away from the peaks which we saw in Q4 of last year. That is Jan-Feb-March average of the year 2021.
Well, the third headline today is United Breweries. The stock was up close to 2.5% after the CCI, the Competition Commission, approved Heineken's plan to boost the stake in their company. Nimesh Shah, well, he's been tracking that as well, and he joins us to fill us in with the latest on that. Nimesh, over to you.
For United Breweries, why the stock will be in focus is because last evening, the Competition Commission of India, CCI, has given an approval to Heineken to increase the stake in United Breweries. Now, and of course, this approval is subject to some, outcome of the court proceedings. Now, why this is important is, one, I spoke to a couple of bankers who are working on the deal, and the general feedback is this is a step in the right direction for Heineken to further consolidate the holdings in United Breweries. Now, as things stand, Heineken owns 46% stake in United Breweries. There are reports suggesting that Enforcement Directorate has transferred its 14% stake or 16% stake to banks, and they're likely to sell the stake tomorrow in a special window. Now, if Heineken buys this entire 16%, which is quite possible, then the holding will go up to 62% in United Breweries for Heineken. Now, the key question is, will this trigger an open offer? To that, Money Control has written a story last evening, and they indicate that Heineken has sought exemption from SEBI. And I quote the Money Control report that the SEBI may give an open offer exemption to Heineken, given that it's an inter-promoter transfer. So if that is true, then it's most likely that in tomorrow's block deal, Heineken will buy out the entire 16% stake, consolidate the holding further to 62%, and will become a subsidiary of Heineken. So that is something to watch out.
Okay, thank you very much for that, Nimesh. Actually, if Heineken buys out that stake and the money goes to Enforcement Directorate, chances are that a bit of it will come back to the banks. So we will have to see whether banks also benefit from this deal. Ultimately, all these were pledged by Vijay Mallyas for his Kingfisher exposure to the banks. Okay, that story, of course, is an ongoing one. Let's come to the other deal today. KPIT Technologies stock gained over 2% after the company reported that it has acquired an electric vehicle product company called Path Partner for 191 crore rupees. Rima Tendulkar is here with what this means for KPIT. Rima.
Thanks so much for that. So KPIT has actually hit a fresh high today. This is post the acquisition of an electric vehicle products company called Path Partners for 191 crores. 60% will be bought upfront for 89 crore, the balance over the next 2 years. And KPIT has ample cash on its books in excess of 800 crores, and part of which will be deployed for this acquisition. Now, this acquisition fits in very well with the company's profile, KPIT's profile. So Pathfinders is engaged in design service solution provider for various services in the automotive part, like cameras, security, IoT, multimedia devices. And we all know that KPIT Technology is an IT company which is purely focused on the automotive side of business. So the synergistic fit is perfect. In terms of financials, this acquisition will add 4% to KPIT's annual revenues. And according to some analysts I spoke to, the acquisition is also likely to be EPS accretive. Back to you.
Thanks a lot for that, Rima. Well, the PMB Housing Finance stock that gained close to around 5% today after SAT allows its EGM to proceed today. But obviously, uncertainty over the deal with Carlyle, that continues to linger on. Lata, tell us more on that.
Well, it's a bit of a tangle because SEBI has said that the pricing formula is wrong. 390 rupees, which was arrived at according to the SEBI rules, ICMR rules, are wrong. But, Carlyle has taken that to court, or rather PMB Housing has taken that to the appellate authority. The appellate authority, SAT, has allowed the EGM to continue. Now, in the EGM, how will the vote go? Will they agree? Will the majority of 75% that you need, 75% shareholders agree to the 390 price per share that Carlyle, General Atlantic and Aditya Puri are paying to buy the stake? Well, chances are they will, because if you take PNB, which is the promoter-owner company, the bank PNB, plus Carlyle, plus General Atlantic, then they anyway have 85% of the votes. So much will depend on how PNB votes. Now, PNB, one wouldn't know, in order to appease their shareholders who are complaining, will they vote against the deal? On the other hand, it's quite possible that people like Aditya Puri may not entertain a higher price. After all, they're coming in for a very small stake, more because of the name, that he would be a member of the board. So there are too many parties to satisfy. If it doesn't go, if PNB demands a higher price, it's even possible that the deal itself ends. So, a lot hangs in the balance today. But the market has been marching higher on the ground that PNB plus Carlyle is anyway more than 75%. Yes. So the deal should go through. Anyway, time will tell.
Okay, all right, Lata, thanks so much for explaining all of that to us. For the time being, though, we'll slip into a small break. You come back and we'll address all the other headlines for today. Stay with us.